One, two. All right, everybody. A one, two, one, 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 two. All right. Um, hmm. Can you guys hear me? One, two, testing the audio. All right, everybody. Yeah, I think everybody can hear me. I'm gonna give everybody just a couple of minutes to join us, and then we're going to have a look at this GBPUSD setup that I have on. Good morning, this morning, Ahmed. How are you? Mm-hmm. All right. How's everybody doing? Egotron, how are you? Chris, Light has hello. Good morning from Quebec in the house. Love it, love it. What about BTC, sir? Well, Germany in the house. Love it. All right, so I'm gonna go through a couple of things here. Um, yeah, USD. Well, the S&P 500 dropped last night. I mean, I don't know if you noticed, but Atlanta in the house. Woof. The last time I was in Atlanta was 25 years ago. Yeah, the S&P 500 dropped yesterday. Because I don't know if you noticed or if you saw. Let me just delete this. If you saw, you know, the numbers. Hold on just a second. Right. The earnings from Meta, Amazon, etc. So what I'm looking at here, mate, is the pound US dollar. Right. So basically, what I'm looking at here is buying the dip on the pound USD. If you remember, I missed this entry, the entry that I was looking at last week for the entire week. And I missed it because this dip buy was on Sunday, and I just was in front of my charts to put on the buy limit at the 110 level, right? But now I'm looking at possible dip buys here in the pound USD, right? So what are we going to do? Hold on, I'm just looking at. I do have a gold long that I got triggered on overnight. And right now it's in a little bit of a drawdown, but I'm sticking on to that trade. Now, if you're a VIP, you are with me on this trade. And basically what I'm looking at here is this. I mean, my entry was at the 1655 level. My stop losses are below the structured lows. And I'm just trading the power buy zone, the same setup that um, that we saw last week in gold. So if I get stopped out, I get stopped out. That's fine, right? And if I get stopped out, that means that this market is no longer controlled by buyers or by bulls, right? Now I was talking about the pound US dollar, right? Because I missed that buy on the GBP USD, I've been looking for possible buys on this market. And to be completely honest, I do wanna get in on a buy, but a little bit lower. To me, here it is too high, right? And I mean, there's two possibilities, of course, always. One, price rejecting the previous highs and then continuing with that bullish move. In that case, I wouldn't be on the trade, right? Because I'm not going to buy at these levels. So my preferred level to buy into this market should be around the 135. I'm sorry, the 113.50, the 113.50, just around here. Just around these highs, right? Now, the reason that I'm looking at this pullback, which we don't know if it's going to happen, is because I'm looking at a lot of imbalance built here, right? On the break of this, let's call it a pullback structure or a flag. Now, what do you guys think about this market? This market is super strong. Now, my entry would be in profits about um from my entry to the highs about 550 pips, right? And if you notice, there hasn't been a real deep pullback. So why don't we have? I'm going to delete all the drawings, and we're going to start dissecting this market from the higher time frames. So if you have any questions, just go ahead and write them on the chat. I'm gonna be more than happy to answer them. All right, Tim, let's do that after the show. So basically, um, on Monday, right? On Monday, I saw price, that price had mitigated my demand zone and had rallied about 200 pips. I am not the kind of trader that's going to chase moves, right? I am okay with having missed that move, even though it hurt because I had I had been babysitting that setup for for a week, but it's fine, right? We are going to find another buy entry. So let's look at some key pivotal levels in the market, right? In this market. Now, I'm gonna go to the daily chart. Let's start dissecting this market from the very high time frame. So, first key pivotal level in this market should be this low, right? The one 1425 or so. Abricorn, Highland, which gold trade? The last trade you deleted? No, I didn't delete it. I didn't delete the buy limit that I had. Nope, I did not delete the buy limit that I had. Let me have a look. I think this buy limit that I sent on the VIP group, I did send it about 3 days ago, right? Yeah, about 3 days ago. All right, so let's have a look at this market, right? On the daily time frame, we have this key pivotal level. Price had all, I mean, this is quite bullish in my opinion. And the reason is because not only we have seen price breaking with the previous highs, which in fact is a break of this midterm, or let's call it long term, because we're looking at January 2022 highs, bullish structure. Now, is this really really a reversal pattern? I don't think so. I don't think so. The reason that I don't think so is because of this, right? The real key pivotal level that I'm looking at for a change in the bias in this market in particular is this lows right here. So right now, even though I'm looking for buys in this market, right, on the short term, on the long term, my bias is bearish, right? Let's have a look at the chat. I've spotted a cup and handle pattern on Aussie US dollar for our chart, an inverted cup and handle on monthly chart. Oh, yeah, I'll have a look at that after that. Went in on GBP, Japanese yen buy. Well, good luck to you. Is it okay to go long on the USD Japanese yen? I'm worried about certain BOJ intervention. Listen, I can't tell you what to do, right? I can't tell you what to do. What I do here is that, I mean, I just go through my thought process, right? And I send my trades to the VIP group, and it's your choice to follow me or not. I can't tell you what to do. What I can tell you is that I am not looking at um, Japanese yen trades at the moment because of how manipulative this market is at these lows. Yesterday, I talked about it. I showed you why I am definitely not looking for this. A quick look, right? Just have a look at this. This massive buys here. A lot of buy volume from the lows, which happen with absolutely no high impact events in the economic calendar. So this leads me to believe that this is the Bank of Japan just buying yens, a shitload of yens, right in the open market. Um, and yeah, I don't want to trade this kind of markets at this moment. Yeah, I'm not comfortable trading something that I know or that I've seen heavily manipulated just a week ago. So let's go back to the pound, US dollar. We have a new prime minister in the UK, which to me, I mean, it really doesn't matter. Change absolutely nothing, right? Now, well, yeah, we could go into the difference between policies from the last prime minister to the new prime minister, but we're not going to do that because I mean the UK changes prime minister more often than McDonald's flips burgers. So what we're going to do here, just look at price action itself and try to spot a buy setup. Thanks. Must have been Olympus sell trade. Yeah, I don't know. So this is the forward chart. The market. I mean, price is in my opinion, heavily bullish. So let's delete this and let's dissect this market. So these are the previous broken highs from the 4 hour chart. I always pay attention to these levels, right? Now, the reason that I pay attention to these levels is because one, we are looking at the 115 level, which is a round psychological number, right? Price broke with it with very, very strong bullish momentum. But I do believe that trading the dip on the previous broken highs in a bullish move is weak, right? Because normally and more often than not, price is going to just mitigate the previous. All right, I'm sorry. All right, can you guys hear me? Yeah, I think you can hear me. I'm sorry, guys. I don't know what happened, but um, yeah, I'm back now. Yeah, I'm back now. So we're talking about the GBPUSD, right? Now, I was talking about that 115 level, right? I was talking about that 115 level. And yeah, I mean, I'm not too keen of buying the dip on the previous broken high. I'm just not, right? I'm just not. Um, because mathematically speaking, right? Mathematically speaking, um, the probability of success of a deep buy with a deep pullback is much higher than the deep buy with a very shallow pullback. Now, that's just what I have figured out by mining the data and back testing my setup, right? And yeah, and mining the data on my actual trades, historic trades, right? So I am not the one that's going to buy here. And if price rallies, that's okay, right? Because sometimes I'm going to miss the trade because the pullback is going to be shallow. But what I think about this particular market is this. Now, we right here, this moment in price action, you can see that this is a very strong bullish momentum, right? So there's a couple of imbalances created in this market. Um, and right here we have the one that I am looking at. So imbalances in the market again are gaps in the market basically. So what I look for, what I look for is the previous impulse, in this case to the upside, of course. I look for the previous impulse to the upside. Now, then I look at the actual price action to see if that impulse was strong enough to create imbalances. This is the 17-minute chart. So I'm going to go to a 5-minute chart and go back in historic price action to that level that I'm looking at. So right here, you can see that when this market broke or price broke with the structure of this market, it created an imbalance right here. There are also imbalances all the way up here to these highs. But yeah, hold on. 50-minute chart. But what I'm looking at is a possible buy towards my power buy zone. So I'm gonna go with my fibs. Let's have a look if those imbalances fit my power buy zone. I'm sorry, not my power buy zone, not the imbalances, but the actual demand zone, right? So this is what I call power buy zone, right? These are two Fibonacci levels, and within these two Fibonacci levels is where I look for pullback trades. Now, the last thing that I need to do is look for the demand zone that created this move to the upside, that right, that break of the structure. So what I do basically is just I grab the volume right on the normal volume tool, and I look for those consolidations or accumulations before the actual uh, impulse or the impulsive move, and I look for buy, in this case, buy volume within that accumulation, right? To pinpoint where buy orders started to fill up or started to you know, yeah, fill up this market. In this case, you can clearly see that we have that accumulation here. So basically, the demand zone that I would be looking to trade is this one. Now, this is so the 1, 2, 3, and yeah, my power buy zone is within that demand zone. So basically, this setup checks all of my um, point to my checklist, and this is what I would or I am going to place at the moment. a buy limit within the top of my power buy zone. Now, I am not going to put my stop losses just below that demand zone. I am going to use the structured lows for my stop losses, right? And I'm going to target for my first target the you know the structured highs. Now, my second target, let's have a look at second targets at the moment. And for my second targets, I should be looking at key pivotal levels in strike price action, right? So I could be targeting the 117.20 level for second targets, for a cool 5.6 R trade, right? And it's not the best R, or the best risk to reward ratio. But the reason that is clearly not the best risk to reward ratio is because I am using the structured lows as my stop loss, not the lows of my power buy zone, which would yield, in fact, a 9R, right? So that's what I'm looking at on the pound USD. I'm going to flag this one. Let's continue. Let's continue. Now, uh, yesterday I took a buy on the here on the US dollar, Canadian dollar, right? And I took profits at the highs of the move because we had, GDP out of the US, and we had the interest rate decision out of ECB. At the moment, I'm not looking at any more trades on this market in particular. And the reason, if you look at the hourly chart, yeah, there's a level that is capping the downside in this market. Very clear. The 135 level is capping the downside in this market. But right now, on the higher time frames, this market looks extremely, extremely choppy, right? So, within this range, I'm not interested of taking another trade. Now, the trade that I took yesterday was it was yesterday or the day before. I don't remember, but it was after the, let's have a look here at the economic calendar because it was after Canadian. I think it was yes, yesterday. No, the day before, right? So it was on yeah, Wednesday, after the Bank of Canada rate decision, right? So it was expected that the Bank of Canada was going to hike interest rates by 75% basis points, and they only hiked it only, I mean, within quotes, of exactly 50 basis points. So that yield um, a Canadian dollar drop, right? This was the trade actually. That yield a Canadian dollar drop towards that 136.50 level. Yeah, I mean, if the Canadian dollar drops, that means that the US dollar versus the Canadian dollar is going to rally, right? And that was only the immediate reaction of the market, being disappointed of the Bank of Canada not hiking rates for 75% basis points, whatever. So basically, my trade was a long here, right? At this demand zone, and I close it at this highs, exactly at these highs. Move my stop losses to break even, got stopped out of break even. And yeah, I mean, the USD CAD rallied towards my targets. But the thing is that after looking at how price action, or how this level was capping the upside in this market, and I just decided just to drop it. And because we had US GDP out of the US. Now, having said that, not looking at any trades on that market at all. Euro USD. So let's have a look at the US dollar because it's quite interesting, right? Let's dissect the US dollar. This is the US dollar currency index, or DXY. Now, I do believe I am bullish on the USD. And if you notice, the US dollar mitigated this demand zone, whilst also taking out the sell side liquidity. So the US dollar is very, very bullish at the moment. Sadly, this happened during my off time. Now I'm just looking at dips on the USD for buys, right? Again, I am not going to trade the DXY per se, but if the DXY, or the US dollar currency index, dips towards this level, I am going to look for buys on the US dollar. So, where am I going to look for buys on the USD? Maybe longs on the US dollar Mexican peso, maybe shorts on the GBPUSD. Now, if this plays out, this will be cool actually, because this is something that I've been testing too, guys. Now, I'm I mean, my idea here is to buy, right? To buy into weakness on the GBPUSD. But if what I'm talking about plays out on the US dollar side, I could in fact look for shorts on the GBPUSD, very short term, on a US dollar bullish move, right? So basically, what I would want to see here is just a the reaction of these weak deep buyers at the 115 level, bringing price up towards this the supply zone that created the break of the structure and the liquidation of these very weak buy or very weak buyers in the market for some amazing risk to reward shorts towards this demand zone. So that's another trade opportunity on the GBP USD, right? Should this play out, because this market is very bullish, I would only risk half my normal risk on that short on the pound US dollar. But I've been testing it, and in gold, there was that exact opportunity right here. Let me show you. If this is the 15-minute chart and to go to the 5-minute chart, right? It was yesterday, right? It was yesterday right here. After this bear trap, right? After this bear trap, right at the previous highs of the pullback move, that same opportunity was created. After taking out this liquidity, the risk to reward on this one towards the previous lows yield about 3R or so. So this is something that I am currently testing at the moment, because if what I'm looking at is actually a buy way lower, why wouldn't I look for sales towards those buy levels? And it's looking quite promising. So my gold longs look like they're going to get stopped out, which is fine, right? Which is fine. Which is fine. Um, yeah, I mean, I have to stay true to my entry model, and that is a perfect setup with this entry model. And yeah, I mean, in this game, you are going to lose some of your trades. You can't help that out. So, any questions, guys? Because I am looking at, I mean, there's nothing too hard going on at the moment. Let's have a look at some cryptos. I have a very, very interesting setup in Bitcoin. My entry level will be the 19,900 level, with stop losses around this 917 level, right? I'm not gonna share this with you, but the thing is that it's exactly the same thing that we just looked at on the pound, right? Now, uh, just have a look at the pound. It's exactly the same thing, right? That break off the previous highs or the level, key pivotal level in the market that was capping the upside. So this market could turn bullish, could in fact turn bullish, because we don't know if this is in fact a bear trap, a bull trap, I'm sorry. So on Bitcoin, same fucking thing, right? But it's clear in the sense that this level above this level, there's absolutely nothing but imbalances in this market. Yeah, I'm holding. I mean, I'm not doing anything to my gold longs other than, well, I just got stopped out. I just got stopped out, which is fine. But Bitcoin, right? Bitcoin at the moment, in my opinion, is very, very bullish. So there's a couple of levels here that I want to see mitigated, right? I want to see price come down and take out these lows, right? So should price take out these lows, the area that I want to get in on, or what I want to put on my buys around the 19,900 level, because I do want to get filled. And because this market is extremely volatile, I am going to have wide stops. And also because of what I showed you on the 4 hour chart right here, because of what I showed you on the 4 hour chart, this might be a massively good entry for a swing trade to the upside. Now, just have a look at this. The next key pivotal level in this market, should this play out, right, is the 22,800, let's call it, to 22,800. And not only that, but there is this massive imbalance um, in this market, right? So everything is looking very bullish, very bullish. What I also dig about this setup is this, right? Weak deep buyers, right? Deep buyers that were trying to buy the dip at the retest of the previous broken highs just got fucked, right? This is exactly the same thing that yeah, gold stop loss hit made. I mean, that's fine. I mean, don't cry over one single trade, right? That setup had a massively good probability of success, but the probability of success of one setup is never going to be 100%, right? That in particular setup has about a 71.8, 72.4 probability of success. Sadly, this gold trade was one of those, let's call it 33% uh, trades that we are going to lose, right? So, I mean, if you're crying because of one trade or one losing trade, it means that one, you're using way too much size, or two, um, you know, you're just a beginner and don't understand that losses are going to be part of your trading experience. So chill out, mate. Just manage your risk accordingly, and you're going to be fine. So basically, what I'm telling you is this exactly the same fucking thing that we are looking at on the pound, right? Deep buyers that were trying to buy the dip or buy the retest of the previous broken highs got got taken out, right? This is exactly the same thing that I'm waiting for on the pound US dollar, right? The same thing. Most likely, those are weak dip buyers are going to be taken out. Now, there's a ton of sell side liquidity in this market. And again, there is a ton of big imbalance on the higher time frames. So on the lower time frames, we're going to find a ton of very short-term imbalances, right? Yeah, I mean, NC Tahik, I'm sorry if I butcher your name. Yeah, I know, mate. And you know what? Yesterday I saw gold dip towards my entry and missed it by what, 5, 6 pips again. But I'm going to dissect that gold trade later, right, by my own, because I don't know if it was a good idea to, after that move, to leave my buy limits um active. I don't know if it was a good idea or not. I don't know. But yeah, I have to dissect that trade. But yeah, I saw that. I saw that. I mean, price came in. Uh, let's have a look because Yeah, this was it right yesterday. Brum. This was it yesterday. So I don't know if it was a good idea to leave my buy limits active or not. I don't know. I don't know. Thank you, Ansi. Thank you. Thank you. Thank you. I make mistakes. Everybody makes mistakes. Sometimes I miss my trades, but I do work very hard on my trading. To plug those leaks. And yeah, I mean, missing trades like this, uh, it's pain, but it's fine. We're working on it. So same fucking thing on the pound USD, right? I'm waiting for this. I'm waiting for these weak big buyers to get take out. To get fucked. Wow, this is the 1 hour chart on the pound US dollar. Just have a look at this massive imbalance, right? So there's a ton of magnets to the downside in this market, just as they were on Bitcoin, right? Now, um, again, we are going to see deep buy. Just have a look at this again. Oh man, I got stopped out at the previous highs. Then I am going to trade the other highs right here. I mean, the other highs, and then we're going to get the other highs. But price most likely is going to keep dropping. And also, why would you want to trade uh, a bearish structure without really looking into the market structure and really looking where where buy orders were accumulated before those breakouts. So yeah, I do have a Bitcoin setup, which is exactly the same setup that I'm looking at on the pound US dollar. So it really doesn't matter which markets I'm trading, right? The setups are the same. Setups are the fucking same. Always, always. That's what I tell you. This game is all about math. I mean, if you don't understand the math behind behind your trading, one, you're not going to trade optimally in the sense that you're not going to be trading the same setups over and over and over. And that means that if you don't trade the same setups over and over and over, then you're going to have leaks in your trading because um there's no way that you can mathematically know the probability of success of each one of your setups if you're trading the same ones which you had already backtested. I don't know if I make myself clear, but math is super important. Now that the DXY is going down, won't that affect the GBPUSD by making it go down as well? No. Victor, so there is correlation between the US dollar and the pound, right? US dollar and the euro and the USD, etc. I'm sorry. You have to understand that it's 2:43 a.m. here. And I haven't had any coffee yet because yeah, I just have uh, a little bit of a high blood sugar at the moment. So when the US dollar goes up, that is going to bring the pound against the US dollar down, right? And when the US dollar goes down, that is going to bring the pound versus the US dollar up. But correlations in currency markets are not always perfect. Well, I mean, far from it. For example, right now, um, here on this setup that I am looking at, this is not a US dollar driven trade. This is a pound driven trade, right? This this rally from the 110 level right here, the one that I missed, is all about the pound, not the US dollar. So you have to think about what you're trading when you're choosing the currency pairs that you're looking at, right? Am I trading the USD or am I trading the pound in this case? In this case, it is the pound. But if the USD continues to rally, this is going to help my setup a ton, right? Because it's going to bring the pound versus the US dollar down. Or maybe not bring the pound versus the US dollar down, but we're going to see a ton of bearish pressure here, right? That's about it. So nothing going on here. Yeah, I need to dissect this because I do believe that it was a very, not a very bad decision, but it was not the optimal decision to leave my buy limits active after seeing this. Now, the reason is because, right, I'm gonna tell you this. I'm gonna do this with you guys. So basically, in hindsight, everybody's a fucking hindsight hero, right? But yeah, after missing this trade yesterday, like Ansi just pointed out, I mean, we missed it for about 3 pips, right? I think that my trade idea was gone after price failing to break the previous highs and creating this bull trap. And also after looking at this breakout right here and such a strong move. So yes, this might have been a mistake on my part to leave those buy limit active after 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 the failure. I mean, after price mitigating the zone that I was looking at and the failure of an upside continuation. So the way that I see it now that I'm talking about it with you guys is this: if I have been triggered right in this dip towards my zone, would have I let this trade ride with my full risk open? No. I would have taken profits here, most likely. And after seeing price break with these two highs, I would most likely have closed the rest. So if you think it about it this way, then leaving my buy limits active was a mistake, was a big mistake. So yeah, it was a mistake. Thank you for pointing that out, mate, because do not analyze gold anymore, please. Listen, mate, I mean, just don't take my trades. I'm going to keep on trading gold because what you don't understand, what you don't understand is that I might lose 3, 4 trades in a row. But what I do is profitable in the long term. It's all about the numbers, mate. I mean, you don't have to be results oriented. And I know it sounds counterintuitive in the sense that what we need is results, right? But if you focus on the results of one single fucking trade every single time, right? Um, you're never going to understand and look at the broader picture, right? So this particular setup that I'm talking about, right? Makes money in the long term. I would take this every single fucking time, right? Because on a vacuum, it makes money. Now, what I'm talking about was the mistake that I made on leaving my buy limits active after everything that I pointed out. But if you don't like my trade in gold, just don't take my fucking trades. I mean, what can I say? Sorry, I meant now that the DXY is going up. Yeah, I mean, I understood. I understood. So let's have a look at the pound. All right, so we got that reaction from the previous highs, right? We got that reaction from the previous highs. And I'm going to delete this. Hold on. We got that reaction from the previous highs. Now, there's a couple of things going on here. We had that break of the structure to the downside, but most importantly, hold on. Oof. Most important, I'm sorry. Yeah, most importantly, I'm looking at this. There's no gaps. I mean, or imbalances. But what I'm looking for is a clear area of supply, the supply that created both of these breaks, right? Now, Yep. So here we can see. But this zone has already been mitigated. Yeah, yeah, we can call a spam bot a trading bot. You know, but if the porn spams come to the show, it's because we're doing something good. Remove. So let's go back to the 2 minute chart, mates. Hold on. So I'm just going to eyeball it. Uh, but I would really want if if price rallies towards the 1 1570 level or so, I would definitely be looking for shorts, short-term shorts. Like I told you, risking just half of my normal risk towards my demand area where I'm looking for longs. I don't know if this is going to play out, and that is something I'm still testing. I'm still testing the one that I showed you in gold yesterday. I'm still testing that. But again, you know, uh, this buy setup looks extremely good. Same thing as in Bitcoin. So this Bitcoin setup that I'm not gonna show. I'm going to send to my VIPs on the swing trading group. Gold. Yeah. Now that gold has broken with this low, it's pretty obvious that buyers are no longer in control of this market. So, again, looking at the lower time frames, what we could do here is just look for supply zones where to sell, where to go short in this market. Now, I've been live for about 50 minutes, and yeah, there's a couple of zones that I am digging for shorts in this market. I don't know if I'm going to take it. I don't know if it's going to play out. But for today, the one that I'm looking at is the pound USD. This setup looks very good, looks extremely good. Now, more so because we do have these lows right here that are most likely going to be taken out again because of how weak this deep buy looks. So stay tuned, guys. I'm gonna try to I'll probably be live again for the U.S. Open. Right now there's no trades to take at all. No trades to take at all. Just wait for those setups. Now on the S&P 500 side, yeah, yesterday we saw a big dip in U.S. equities. That's right. Uh, the Nasdaq crashed. I mean, and that was because of Meta. That's not Meta created a five. Just have a look at this. I mean, we're not going to see it, but that's a 20% drop. 24% drop. So yeah, that's going to bring the markets down, most likely the Nasdaq, but also the S&P 500. Even though Meta is not part of the S&P 500, such a big move on such a big company. Well, it's not that big anymore, but still very influential. It's going to have. Um, I mean, we're going to see a reaction overall in U.S. equities. So, having said that, what I like about this is uh, how after that drop, price is recovering, still very much in a short-term bearish move, but it's still very early in the day. I'm going to wait to see pre-market volume hit the markets, to see real buyers. For today, most likely we'll be looking for buys. The thing about this is that normally what I look at is the Asian session range and how pre-market reacts either to the highs or the lows of that range. But because of yesterday's move, it's going to be quite hard. But still, I'm going to be live dissecting the markets, looking for trades. And if you want to join me, then I'll see you guys around later. Cheers.